Felix Somary, the Raven of Zurich, did in the early 20th century. And I'm quoting him now, and he said, "The state alone is responsible for inflation. Inflation without government, or indeed against government, is impossible." From the establishment and the elites to loot the general public. It's a stealth tax that very few people understand. Yeah, and they've done it through inflation. The elites or the establishment's favored way to extract wealth from the general public. And it's one of the reasons people are getting angry. And of course, the establishment is very much aware of this.
Felix Somary, known as the Raven of Zurich, emphasized in the early 20th century that inflation is solely the result of government actions, arguing that it cannot occur without state involvement. He believed that inflation serves as a covert method for the elite and establishment to extract wealth, maybe in the form of gold and silver from the general public, functioning as a stealth tax that few understand. Meanwhile, the Federal Reserve holds the exclusive power to create currency out of thin air, a privilege that, if everyone had, would make money worthless. Mario Innecco, an Italian economist and former central banker known for his influential role in European and global finance, suggests this creation of currency leads to inflation, which is often misunderstood as rising prices, when in fact, those are just a consequence of inflation. The root cause of economic problems is the unchecked spending and borrowing by the U.S. Congress and Treasury. Yet these issues are rarely addressed in political discussions. Thousands of years ago, before money existed, people bartered, exchanging goods and services based on mutual need. Bartering required both parties to have something the other wanted. Over time, certain commodities became more universally desired, making them easier to trade. These commodities eventually evolved into money, valued for qualities like portability, durability, and divisibility. Historically, gold and silver have been the most widely used forms of money, though other items, like cigarettes in post-World War II Germany, or even Bitcoin today, can serve as currency if widely accepted. The Coinage Act of 1965 stopped the use of silver in most circulating coins, with the exception of half dollars, which still contained silver until 1970, but in the Roman era, soldiers were paid with silver coins called denarius. However, by the late 3rd century AD, the Roman government began inflating the currency by increasing its supply and debasing its value, which means reducing the silver content in the coins. We will present clips from Mario's video. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
That institution has been given the monopoly power to create currency or reserves out of thin air. Can you imagine if we all could create reserves or currency out of thin air? We wouldn't have to worry about anything. The only problem is that creating something out of thin air, people soon realize that it's worthless. And that's the whole gist of inflation. That's what it is. Inflation is not a measure of prices. Prices go up as a consequence of inflation. But notice how this person here who's running for president never mentioned the Federal Reserve, never mentioned the fact that the United States Congress and the U.S. Treasury are spending and borrowing like crazy. No, because, and that's the whole reason behind the economic woes that we have. But notice how she's blaming the corporations. She's blaming when society was being formed. People didn't use money. What did they use? What did people do in terms of exchanging things? Well, they bartered. It's very simple. And what's the secret to bartering? Well, you have to have something of value that someone else wants, and that other person needs to have something of value, or a service, can be a service as well, that you want. So you can barter it. It's value for value. And then through trial and error, through the ages, people realized that there were some things that people desired more and that most people desired all the time. Those commodities, they became the most marketable commodity. They kind of facilitated exchange because you didn't have to find someone that had something specifically that you needed and that person wanted what you could provide. This commodity was kind of a facilitator of exchanges, and eventually it became what people call these days a currency or money. And there are a lot of qualities that this most marketable commodity has to have, of course. And one of them is that it needs to be valued by people, or else they wouldn't want it. It needs to be easily carried around. It needs to hold its value over time. It needs to be divisible. And over the years, over the millennia, there's been all kinds of goods and commodities that has been used as money. But in the last 2,500 years, it's been gold and silver, and it's been other things, of course. In the aftermath of World War II, for example, in Germany, people were using cigarettes as money. Their currency had collapsed, of course. So it can be anything. It could be Bitcoin. If people really think Bitcoin is going to be the most marketable commodity, they could use it as money. That's how it was created. That's how Satoshi Nakamoto wanted to see it, even though now we're told it's just as a store of value. And even gold is very valuable, of course, but it can be used as a currency for the purchase of higher value goods. So, and that's what they used to pay the soldiers with. But towards the, let's say, the end of the 3rd century AD, they started inflating the currency. And what does that mean? Well, they started inflating the supply of the currency by debasing the currency.
By the 5th century, the denarius, once a silver coin, had lost all its silver content, contributing to the collapse of the Western Roman Empire. The Roman elite had looted the public, leaving the state unable to pay soldiers to defend its borders. A similar process began in the West in the late 1960s and 1970s, when silver coins were replaced with less valuable metals, and the US dollar was detached from gold in 1971 by Richard Nixon. This shift allowed for unlimited money printing without gold backing, driving up gold and silver prices as we moved from a commodity-based to a debt-based fiat currency system. Currently, gold and silver are used in collectible and commemorative coins rather than everyday currency. We're often told that inflation is measured by the Consumer Price Index, CPI, a price measure compiled by the government. However, it's important to note that the CPI may not accurately reflect the true rise in prices. As of August 2024, inflation in the U.S. shows signs of moderation. The Consumer Price Index, CPI, reports a softer rise, particularly in core CPI, excluding food and energy, which saw its slowest monthly increase since August 2021. The establishment won't implement reforms, so individuals need to take control of their financial future. This means holding sound money like gold and silver, especially in a system where inflation erodes the value of fiat currency. Currently, the stock market remains unstable, with recent fluctuations indicating potential further declines. The dollar-yen chart looks negative for the dollar, resembling a bear flag. Gold is up $13 at $2,396, with a range between $2,380 and $2,400. Silver is rebounding, currently up 20 points at $26.79. The U.S. Treasury yield curve, particularly the gap between the 2-year and 10-year notes, is close to disinverting, which often signals an impending recession.
When the Western Roman Empire collapsed, there was no silver anymore in the denarius. And that's why it collapses, well, because the establishment and elites in Rome, they basically looted the whole public, and they couldn't pay anymore for the soldiers to keep the borders of the Western Roman Empire. And that's what they've been doing in the West. And especially since the late 1960s and early 70s. And why is that? Well, because first of all, in the 1960s, all the silver coinage was retired in the West. We stopped using silver coinage, and they gave us copper nickel coinage, which base metal, worth a lot less than silver. And the other thing they did with gold was that Richard Nixon, he detached the US dollar, the currency, from gold on August 15th, 1971. And what that did is that it's allowed politicians and the central bankers to print these, which used to be promissory notes for gold and silver coinage. But as I said, they can print these out of thin air, no gold backing or anything. And is it any wonder that the price of gold and silver have gone up in multiples since the 1970s? And I think they're going to continue to do so, because we went from a commodity-based monetary system up until the early 70s into a debt-based fiat currency system, where the national debt is the backing for all the currencies, and the central banks and the treasuries. They will create these ad infinitum, out of thin air. And that's why I'm holding a 50-pound note, CPI, which is the Consumer Price Index, which is a measure of prices that is compiled by the state or the government. And you can you can be sure that it doesn't tell you the truth about prices. They won't bring about the reforms. So you have to take matters into your own hand. And by that, I don't mean violence. I mean on a financial basis. You need to hold money that is sound, money that is real, for a rainy day. And of course, it's very hard in the current system of inflation to be able to save any of their funny fiat currency in order to exchange that for gold and silver, or even to pay off your debts, to make sure that you're self-sufficient and reliant. With that, let's quickly look at where the markets are. This morning, it's just gone past 8:20 a.m. London time. I don't think the stock market is out of the woods. We had big falls Friday and Monday. Market recovered on Tuesday, and yesterday it went back down slightly. But looking at the charts, things don't look good, in my opinion. Look at this chart of the NASDAQ 100 here. Still looks like it's going down. Daily chart. Look at the Nikkei, same thing. And this chart of the dollar yen is still looking very negative for the dollar. It's like a bear flag. Gold is up $13 at $23.96. It's been as high as $2,400 and as low as $23.80. And silver is actually rebounding this morning. It's up 20 points, $26.79. It has been as high as $26.98. The yield curve in the U.S., the U.S. Treasury yield curve, the difference in yield between the 2-year note and the 10-year note, that's almost disinverting for the first time in many, many months. And what does that mean? Well, it usually signals that we're going to have a recession ahead.
Inflation serves as a hidden mechanism for wealth extraction, allowing governments and financial elites to erode the purchasing power of money over time. This stealth tax diminishes savings and disproportionately impacts the general public, underscoring the importance of holding sound assets to preserve wealth in an inflationary environment. Understanding this process is crucial for financial resilience. Share your thoughts on Mario's session about inflation in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Until next time.